Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, driving the narrative. Tesla CEO Elon Musk invests $1.5 billion in Bitcoin and intends to begin accepting the cryptocurrency as a form of payment. We'll have all the details and reaction. Plus, investment in technology. We'll catch up with the CEO of Kohl, Michelle Goss, to talk about the future of department stores in a digital world and their partnership with Amazon. And can democracy and surveillance capitalism coexist? Harvard professor and Social Dilemma star Shoshana Zuboff joins us to talk about the coup she thinks we're not talking about enough. And is our own government to blame? All those stories in a moment, but first, U.S. stocks posting their longest rally since August as hopes of a robust stimulus package seemed poised to materialize. Let's get straight to our Ed Ludlow with the latest. Ed, walk us through this Monday.
Yeah, that rally extending to 6 straight days. Like you said, stimulus front and center for investors, but there's also some optimism around the rollout of the vaccine, particularly here in the United States. But as you say, Janet Yellen, the Treasury Secretary, really lighting a fire under hopes that we will get a big stimulus package. In terms of the sector story, technology, one of the better performers, sending stocks to fresh records. The S&P 500 up 0.7%. But as I said, the NASDAQ 100 up 0.7%, hitting a fresh record. Same with the NYSE FANG Plus Index, up almost 1%. Some of those names that reported earnings last week actually lower, but on the whole positive. And you can see the Philadelphia Semiconductor Index, big outperformance from the SOX today. In terms of some of the companies that are moving on the day, there's a lot of different dynamic stories out there in US equities, Emily. Starting with Palantir, up almost 6% on a deal with IBM. The kind of crux of it is that this partnership with IBM gives Palantir access to IBM's team of salespeople. Palantir has its own team of about 30 people. Through this deal, it will have access to 2,500, which is giving a lot of optimism that it will grow its top line and sales through that partnership. GameStop, wow. Down 5.9% today, continuing off the back of that 80% decline, its worst week ever last week. You know, a lot of hedge funds exiting positions from GameStop. This is one of those Reddit stocks that we've been talking about. Hedge funds closing out positions and that weighing on the stock. I want to focus on some of the EV names, though. Blink Charging down 2.3%. You may never have even heard of them. They're one of the smaller networks of charging stations out there, but they've seen their stock rise 3,000% over the last 8 months. If you dig a little bit deeper, they've got hardly any revenue. They've never recorded an annual profit, and they've gone through many management changes. So now some people on the Bloomberg terminal, investors out there, paying a little bit close attention to this stock. And of course, we have to talk about Tesla. 10K came in this morning, headcount up beyond 70,000 as the company grows. The revenue, the bulk of revenue, the majority of revenue coming from outside of the US for the first time. But really, there was just one story in the filing, Emily, and that is that Tesla has invested $1.5 billion in Bitcoin. Now, that is only a tiny proportion of Tesla's cash on hand, but interesting nonetheless, sending Bitcoin up to a fresh record on the back of that news. Elon Musk, of course, an outspoken positive backer of the cryptocurrency, but interesting that Tesla say in the near term they will try to allow Bitcoin and the cryptocurrency to be used in transactions, payments for some of its products, as long as it's within the law in different jurisdictions and in a sort of limited way. Emily.
Interesting sort of fine print there, Ed. Okay, thank you so much, our Ed Ludlow in San Francisco. For more on Tesla's mega Bitcoin purchase, I'm joined by Bloomberg's Joe Weisenthal, host of What'd You Miss. Joe, do you think Elon putting his money where his mouth is here could completely change the game for Bitcoin, or is this just another small step towards a bigger future?
I'll say two things. One is that, look, I do think part of Bitcoin's rise over the last several months has been this growing institutional acceptance. There's less career risk if you're associated with it. Now it's less perhaps perceived to be embarrassing. And so a big company like Tesla, a big successful company like Tesla, absolutely it helps that story. You know, the other thing is, I think that there's a lot of FOMO out in the retail world, and there's probably a lot of FOMO in the corporate world. And there are probably a lot of CFOs out there who are looking at other people making a lot of money and feeling like, well, should I get involved in this? Should I put a little bit? What's the harm if I allocate a couple percentage of our treasury to it? Why not? And so it's not hard for me to imagine a lot more companies essentially making that decision that's like, everyone else is doing it, and I kind of feel like I should. And so this probably also accelerates that process.
Well, somebody else who's probably happy about Elon's investment is Mike Novogratz, the founder of Galaxy Digital. He was just on Bloomberg a couple of hours ago saying he thinks the price can get to 100,000. Let's take a quick listen to what he had to say.
I originally thought Bitcoin would end the year at 50 or 60,000. Things are happening so much faster than I had predicted, right? The corporate adoption rate, the institutional adoption rate is accelerating beyond certainly what I had thought about. So now I think Bitcoin could end the year at $100,000.
So look, Joe, some of the bigger names that are already accepting Bitcoin, PayPal, Wikipedia, Microsoft, in fact. Does this just spur wider spread corporate adoption? Or if even Tesla can't say we can definitely do this, rather we'll try to do this where it's legal, are there still a lot of hurdles standing in the way?
There really are, but I think, look, the biggest hurdle is that people who have Bitcoin tend to not want to spend it. It's not that it's a real technical challenge per se. It's not a legal challenge per se. These things can be accepted. Bitcoin payment systems on the internet have existed for a long time. It's just that most people who have it see it as an investment, see it going a lot higher, see it as a savings vehicle, and aren't inclined to spend it. That being said, it would not surprise me if at least some longtime Bitcoin holders do end up buying a Tesla with their Bitcoin, in part a show of support, maybe a show of gratitude. Maybe it's because it's a cool story to have say, I bought this Tesla with a Bitcoin, very futuristic sounding sentence. So while it doesn't seem like we're actually going to see anytime soon a rapid adoption of Bitcoin as a payments vehicle for most people, you know, you could see also more companies announcing they'll accept it. It's good PR, if nothing else.
It does, Joe, beg the question, especially as we've also been watching the rise of GameStop. You know, what is fake versus real value? Like, if Elon Musk says it's worth something, does that mean it is, just like if Roaring Kitty says so, or no?
It's probably less different than people would like to believe. You know, there is a difference. I mean, between the two. I mean, in a way, the Roaring Kitty GameStop long hypothesis was maybe even more fundamental based than a call for Bitcoin at this point, not necessarily in terms of price, but in terms of the logic. But I think like we do live in this sort of moment where influencers can emerge out of anything and they can decide that a stock is worth more if they gather enough attention. A currency can be worth more. It can be a joke currency like Dogecoin, which is also at record highs. It's a very weird moment, but it's this intersection of social media and money and liquidity and low transaction costs that make all these things possible.
And quickly because we have some great video, what is Dogecoin and why does Elon Musk like it?
It's a joke currency, but people like being in on jokes, is how I would put it. It's fun to be in on the joke, and a joke could get bigger and bigger as more people repeat it, and the way you repeat it is by buying some. And so I think Elon is having a lot of fun right now. I think that's a big reason he bought Bitcoin. That's fun. I think he likes tweeting about Dogecoin because it's fun. I think other celebrities like tweeting about Dogecoin because it's fun. It's a funny joke that keeps getting bigger.
All right, well, the joke will continue to follow. Joe Weisenthal, thank you so much, as always, for joining us, host of What'd You Miss? Okay, coming up, we are continuing the Tesla Bitcoin story, also diving into where Apple stands with electric cars. Lots of speculation through the weekend, all of that with Wedbush's Dan Ives next. This is Bloomberg. As we've been covering, Bitcoin surging to another record high Monday as the cryptocurrency touches the $44,000 mark. This in part because of Tesla's big $1.5 billion investment, becoming the biggest company yet to back the cryptocurrency. Mike Novogratz of Galaxy Digital spoke earlier on Bloomberg Television.
Young people are buying into the future, and they see cryptocurrencies, Bitcoin and other cryptos, as their currencies. And so Elon is a genius in that he realized, listen to the people. Put some of my balance sheet in there because he's worried about the dollar. Okay, that's a speculative bet. But it's more the messaging of what he is doing that's important, right? Soon to be allowing customers to buy in crypto. You're going to see every company in America do the same thing.
Well, it looks like it's not just companies that's thinking about this. You have Mayor Francis Suarez, Miami, thinking about adopting Bitcoin on its balance sheet, according to a tweet he had sent out today. How realistic is something like that, and are more cities likely to think about it?
Listen, there's a war for talent between companies and between cities, right? We've got this tax arbitrage going on where people move out of New York to Miami or to Austin, Texas. You've got cities fighting for the best human capital. Now you got the biggest, the wealthiest man in the world and one of the biggest stories doing it. You got to think other CFOs and CEOs are going to say, what should we be doing?
Well, let's talk about value here for a second then. Where should Bitcoin be in 6 months?
Listen, I originally thought Bitcoin would end the year at 50 or 60,000. Things are happening so much faster than I had predicted, right? The corporate adoption rate, the institutional adoption rate is accelerating beyond certainly what I had thought about. So now I think Bitcoin could end the year at $100,000.
Joining us now for more and a look on Tesla's dive into Bitcoin, Wedbush Securities Managing Director Dan Ives. Dan, what's your take on Elon and Tesla backing Bitcoin to this extent?
Yeah, I mean, there was really speculation in the market the last few weeks. Would Tesla ultimately dive into the deep end of the pool when it came to Bitcoin? And I think this is a move that's significant because it's Tesla and Musk. And, ultimately, I think it's really two parts because this as well as the transaction piece. And definitely, this is going to have a massive impact, I think, across corporations. It was MicroStrategy, now Tesla. But when Musk talks, others listen. And I think this is going to be a big move in terms of the currency from a corporate perspective and investment. And for Tesla, it's just another potential tailwind from a momentum perspective.
Well, when Musk talks, you're one of the people who have to try and figure out what he's trying to say and what it actually means. What's your take on these Dogecoin tweets? And does it actually matter for the business?
Well, I think the worry is you don't want a sideshow to ruin what's happening in the golden age of EVs. Because Tesla, despite all the issues over the last few years, back against the wall, right now they're in a leadership position in the market that's going to be in the trillions over the coming years, GM and others going after it. I think that's the one thing, is that it's fine to invest on Bitcoin, transactions, be a leader. That's who Musk is. We've seen it across the board. But you don't want the sideshow and some of the tweets to overshadow the broader story that's happening right now. And I think that continues to be a balancing act from investors, especially when you look at Musk and everything he's accomplished.
Right. I do want to move on to Apple. Lots of speculation through the weekend as to whether Apple is in talks with Hyundai and Kia about an electric self-driving car. Both those companies now coming forward saying they're not in talks with Apple. What exactly is happening here? What exactly is Apple working on?
Sure. So I think there's going to be a lot of twists and turns on Cook and Cupertino's EV initiatives. And I think what we saw with this Hyundai news, I still don't think that that's dead, but it just shows that Apple is going to continue to pick a partner, and they're not done there. And I think there's a few partners that they potentially could look at. We thought Hyundai, also VW, as well as potentially Ford. It's not a matter of if they're going to go into EV, it's a matter of when. And I believe this is going to be a significant initiative in terms of the Apple car. It's about a partner. We believe over the next 3 to 6 months, they pick an EV partner, but clearly a lot of twists and turns, as we've seen with this Hyundai news over the last few weeks.
And what will be Apple's key differentiator from the main competition, which is Tesla at this point?
It's, in my opinion, it's the best brand from a consumer perspective globally. The golden brand, 1.4 billion iOS devices. You bring what I believe in the labs at Cupertino, autonomous, with that unparalleled install base, to the right EV partner. We're talking about potentially 5 to 10% market share of a $5 trillion market. That's why I believe Apple's going to dive into the deep end of the pool on EV. And ultimately, this could add $30 plus to the stock as they're even just what I believe partially successful in terms of establishing themselves. I believe 2024 and Apple cars on the road.
All right, Dan, as always, love your golden metaphors here. Dan Ives of Wedbush Securities. Thanks so much. Much to follow. Okay, coming up, sales of the department store Kohl's fell in the last quarter as the pandemic continues to roil the retail world, but CEO Michelle Goss sees much better days ahead. She'll join us to talk about the future of physical retail in a digital world next. This is Bloomberg. The COVID-19 pandemic is reshaping retail stores, perhaps for good. Even before the health and economic crisis, brick-and-mortar retailers had been fighting a fierce battle against Amazon and other e-commerce players. Kohl's CEO Michelle Goss with us now to talk about how the company is working to adapt and thrive in these challenging times. The store's fourth quarter revenue fell 10%, but was better than it was at the height of the pandemic. So, Michelle, in addition to a partnership with a company like Amazon, you have been making some significant changes to weather the pandemic and beyond. What of those changes, which one do you think has been has had the biggest impact on you being able to improve growth from where it was, say, at the height of the pandemic?
Yeah, thanks, Emily. It's great to see you again. I think Kohl's is positioned really, really well as we emerge from this pandemic. I mean, clearly sales are still impacted because we are in a global pandemic, but what we just reported was once again another quarter of sequential improvement, both on the top line and importantly on the bottom line. So, we've learned a lot in how we've navigated this pandemic, and I'm looking forward to not only driving growth, but driving growth more profitably as we come out of this. There's been a lot of marketplace disruption, and I think we're really poised to take advantage of that. We're emerging as we were going into this as a strong omni-channel retailer, and we're emerging even stronger. We have a healthy store base of almost 1,200 stores across the country. We have a thriving digital business that's been instrumental during this pandemic, and I fully expect that will continue to play a role. But the stores are at the core of Kohl's. And as I think about that going forward, it really sets us up to drive innovative partnerships and think about our stores differently. So Amazon is a great example. And that partnership came together and launched across all of our stores a little over a year ago. And I think it's a really good example of unconventional innovation and really creating a win-win for two companies that have complementary strengths and is, to me, the epitome of digital, i.e. Amazon meets physical, our Kohl's stores. So basically how it works is we take in Amazon returns. It's easy, it's free, it's seamless. The customer doesn't have to package it up. Big win for Amazon. What we get is lots of traffic and lots of new and younger customers.
So you say you have almost 1,200 stores, and I wonder longer term, do you see all those stores surviving? Do you see more stores or less stores? I mean, you and I grew up going to Kohl's and JCPenney and Sears, but that's not necessarily going to be the case for our children.
Yeah, I mean, I think generally, Emily, people are underestimating the importance and power of stores as we look forward. And there are lots of stores that have had to close over, not only during the pandemic, but with just the general disruption in the industry leading into and then accelerating during the pandemic. Our stores are healthy, and I think this is going to benefit us. And as I said, we're thinking about our stores differently. We're innovating. I talked about the power of the Amazon partnership. You asked me the question, what am I excited about coming out of this? We just announced a really powerful partnership with Sephora, which is taking full advantage of our omni-channel capabilities. I mean, beauty is a great example where, yes, you can transact online, but there's something really special about going in and touching the product, having a beauty advisor help you in your beauty journey. So I'm fully expecting that we are going to continue to have a thriving store base. What that looks like long term, I mean, Emily, we have no plans in the short term to close any stores. And, I'm fully expecting there could be opportunities down the road to bring Kohl's to neighborhoods that don't have them today. But we'll let the conditions normalize before we declare anything.
So if digital sales accounted for, I believe, 40% of net sales in your last report, do you see that number increasing? Like, do you see the balance between digital and physical changing, or is that balance as it is today something you see for the foreseeable future?
I think the behaviors and adoption of digital is here to stay. Now, 40% is a very high penetration. I think as people, as conditions normalize, as I say, and people are out and about in stores, and I think they'll want to be. I mean, we have customers in our stores today, but whether or not we'll hold at 40% in the coming year, I don't know. I mean, I think the power of our business is that customers can shop us wherever they want. And if that's on their Kohl's app, it's Kohls.com, it's now curbside, what have you. But I do think that we will see a heightened level of digital penetration or digital adoption versus what we saw coming in. But that's very good for us because we know our most loyal customers actually shop both on our digital capabilities as well as in our stores.
So last quick question, Michelle. It's not a quick one, but we only have about a minute left. Your former colleague at Starbucks, Roz Brewer, was recently promoted to the CEO of Walgreens, and I'm curious what your thoughts are on that and what you are doing at Kohl's itself to make sure that you are also creating a pipeline of women to become top women leaders, potentially elsewhere.
Well, first off, congratulations to Roz. That is just phenomenal to have another female CEO in the ranks. And I'm really proud of our efforts around diversity and inclusion. It's something we have been prioritizing for many, many years. And over the last year, we've taken a heightened approach. And I'm extremely proud of how the organization has embraced all forms of diversity. As it relates to women, 70% of our customers are female, 70% of our associates are female, and we're doing a lot to cultivate female leadership. And I think a great example is, obviously I'm a female CEO and my CFO is also a female. And so that combo is pretty unique, and I hope it's less unique in the future as we help develop future female leaders looking ahead.
I hope it's less unique in the future, too, and I'm glad to see what you're doing there. Michelle Goss, CEO of Kohl's, thank you so much for joining us today. Okay, coming up, what is surveillance capitalism? We will talk to esteemed author and Harvard professor Shoshana Zuboff, her warnings about big tech's role in our everyday lives in ways we may not even understand. That is next. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. Tech companies are increasingly being put in the position of power as more and more information is gathered about their users. Platforms know more and more about you than you know about them. This is the latest from Harvard professor Shoshana Zuboff, author of a New York Times op-ed last week where she argues we can have democracy or we can have a surveillance society, but we cannot have both. Joining me now for more, Shoshana Zuboff herself, author of the award-winning book, The Age of Surveillance Capitalism, and professor emeritus at Harvard Business School. Shoshana, thank you so much for joining us. You think very deeply about these topics, which at sometimes can be hard to distill for a fast-paced TV audience. But I'm curious if you could start us off by defining, what is surveillance capitalism? We keep hearing this term, but I think a lot of folks don't quite understand what it means and why it can be potentially dangerous.
All right, well, let's see if we can fix that real quick. So surveillance capitalism is an economic logic. That's the first thing to know. And the way it makes money is it claims our private experience as its source of free raw material. It translates that raw material into behavioral data. These are the data that are flowing through social media and all the other websites and ecosystems and applications and companies that you're online with, or that are on your phone, or that you're dealing with as you march through the city or go to work or you're in your car. It claims our experience is raw material, translates it into behavioral data, then that behavioral data is immediately reconceptualized as its private property. They then compute it, they turn it into predictions of our behavior, and they sell those predictions. That's how it works. The first big successful global market in predictions of our behavior were the online targeted advertising markets. The predictions of our behavior.
So you're talking about companies like Facebook, like
I'm
Google,
talking about
like
surveillance
Twitter.
capitalism was actually discovered, invented, first elaborated at Google 2000, 2001. It migrated to Facebook. It became the default paradigm for the tech sector, but it now runs through the normal economy, whether we're talking about health, education, insurance, real estate, retail. There is no industry that is exempt from this. Every product that begins with the word smart, every service that begins with the word personalized, every app on your phone is siphoning personal information to these big agglomerators, the Googles, the Facebooks, the Microsofts, the Amazons, and so on.
So why is this such a problem? The title of your op-ed is "The Coup No One is Talking About." What coup?
All right, well, when we understand how this economic logic works and how surveillance capitalists compete, they're selling predictions. That means they're selling certainty. They're feeding their AIs with a lot of data in order for their AIs to produce these predictions of our behavior. We know, for example, at Facebook, its AI ingests trillions of data points every day and produces 6 million predictions of behavior every second. That's the scale that we're up against. So what they're doing is virtually everything we do that has an internet touch point is a supply chain interface for these companies. They are constantly capturing behavioral data from us. They have engineered ways of doing this that are outside of our awareness. They're designed to keep us ignorant because they know that we don't like it and we would resist. That's why it's called surveillance capitalism. It's designed to be hidden. And what happens is that all of this knowledge that they have amassed about us, I mean, think of this growing gap between what we can know and what can be known about us. Well, what is that knowledge doing? They're using that knowledge to target us, a range of targeting mechanisms that most people have heard about. You've heard about, for example, recommendation tools. You've heard about algorithms that amplify information specifically to you, subliminal cues, engineered social comparison dynamics, psychological microtargeting. These are ways that they use all of this knowledge to come back to us with targeting, to get us to manipulate our behavior or our attitudes, to shape our behavior, to tune our behavior in ways that align with their commercial objectives. And of course, what we've learned is that the same suite of operations can be rented. It's called political advertising, and it can be rented to any politician or candidate or oligarch, for that matter, anybody who's got enough money and knows how this works, to shift the whole thing from commercial objectives to political objectives. And that, of course, we've just seen the apotheosis of that on January 6th in Washington, D.C.
Now, you go on to argue that tech is sort of like the government we never elected. What should the government now do about this? I mean, you know, the FTC, the Justice Department, they're scrutinizing big companies like Google and Facebook, but it sounds like a breakup of Google or a breakup of Facebook wouldn't necessarily fix the problem that you're talking about.
Look, the big question that I am posing to everyone who's listening to us right now and everyone that is a citizen in this democracy and all the democracies of the world, here's the question. Will the digital century be a democratic century? This is the key question. Right now, we do not have, our democracy and all of the world's liberal democracies have failed to shape a vision of the digital future that is a democratic future, that is a future that will fulfill the aspirations of democratic people. And so these companies, the surveillance capitalists, they own the data, they own the technology, they are deciding on the principles of our social order. We need democracy to reclaim the data and technology for people and for society. And obviously, when I'm talking about democracy, I'm talking about we need law. We need the digital to live in democracy's house, under the rule of law, with the values that once again reorient data and technology to solving our problems and to solving society's problems. This is not the case right now. And unless we do that, we are drifting toward a future that is more dystopian, that is more surveillance-based, where all the power is lodged in these private companies that we did not elect, that are operating in ways that we do not choose. And we know that from all the survey research. When people find out about what these operations are really doing to us, it is universally rejected. But we have not had the opportunity to debate this as a society. So we need antitrust, but we also need to go beyond antitrust. We need to be able to create the new charters of rights, the new legislative frameworks, and the new kinds of democratic institutions that will keep this digital century safe for democracy. We did this in the 20th century, Emily.
What do you mean by that? What do you mean by new democratic institutions?
Okay, that's a great question. So think about the industrial age, right? In the early stages of the industrial age, when factories were being built and people had to go to work in factories, the employers had all the power. There were no workers' rights. There were no consumer rights. There were no laws to protect people, right? That was the early stage of industrialization, and that's where we are now. We are in the infancy of our information civilization. And what happened in the 20th century? In America, for example, it took until the third and fourth decades of the 20th century before we had those rights codified in law. For example, for workers to join unions, to go on strike, to bargain collectively, consumer rights, to save food, safe medicine, all these institutions that were invented in the 20th century, Emily, from the institutions that oversee banking to the institutions that oversee health and safety, the institutions that oversee all of our rights, whether it's, fair trade, stock market, just about every democratic institution you can think of was invented in the 20th century. Unemployment insurance, Social Security, these were all inventions of the 20th century. This is where we are now. This is the challenge that we face. The rights, the laws, and the institutions that will make the digital century now safe for democracy, as we did a century ago.
Wow. Well, certainly this is not the end of a conversation we are going to continue to have. Shoshana Zuboff of Harvard Business School, also a very well-known author. Thank you so much for joining us today, and check out her book, The Age of Surveillance Capitalism. Okay, coming up, after the WeWork debacle of 2019 came the pandemic, which has led to significant changes in the co-working space landscape. We're going to talk to the CEO of The Riveter, a community platform for women entrepreneurs, about the future of business and work in business next. This is Bloomberg. Like much of the commercial office landscape, the COVID-19 pandemic has forced co-working spaces to adapt to a new reality while facing uncertainty about future appetite. Joining us now, Amy Nelson, founder and CEO of The Riveter, a community network that provides tools for women in the independent economy. The company also provided co-working spaces for women, but has closed its operations during the pandemic. She's part of our work shifting conversation this week. So Amy, talk to us about what happened to The Riveter and how co-working space as a business is evolving.
Yeah, thanks so much for having me, Emily. In the spring of 2020, so nearly a year ago, we had to make a very quick decision whether to keep our spaces open or close them. We were in 6 different states at the time, but I wanted to make a decision that would resonate for all of the safety of my members and employees. And so we decided to shut our spaces across the country and to stop charging our members because we knew that small businesses, particularly women-owned businesses, were being hit really hard by the pandemic. And so from that, we've exited the co-working space for now. But we still really believe in the future of in real life meeting and getting together, and that there's a big opportunity for co-working as we move forward.
Why do you think that there's still going to be an interest in co-working in a new normal, whatever that new normal looks like?
Whatever it does look like, right? Well, I think that work has changed forever. I think that companies that were very reluctant to allow their employees to live in other cities and work remotely have been forced into this new paradigm and have seen that it really works. I also think that we're in an interesting economy. This isn't a recession, this is a virus economy. And I don't think we really know what that means and what recovery will look like. So I'm a strong believer that as we move forward past the pandemic, companies will really look to freelancers in a new way as they can lever up and lever down whatever they need as we move forward. And so through that, you'll see a lot of people who are working in different ways, who are working in different spaces. And people who aren't in that office culture, they still need community. They still want to be around people. And as the mother of 4 girls, and I know, Emily, you're the mother of 4 as well, it's awfully hard to work at home. So I think that co-working spaces will see a resurgence.
So you've been talking about how hard the pandemic has been on women. We've heard the same from Sheryl Sandberg. I think she calls it a double-double shift that people like you and I are doing. It's been hard for everyone, to be fair. But how are women who work faring now that we're almost a year into this?
I mean, the numbers are horrible, Emily, right? We've all seen them. We've seen that 3 million women have exited the full-time workforce since the beginning of the pandemic, and that's pretty stunning. To me, I see it as a symptom of problems that have existed for decades and decades, right? We know that women are paid less than men still. We know that women with kids are paid less than women without kids. And so it follows often that those women are seen as the first to let go because they have other responsibilities. We still see parenting as primarily falling on the women's shoulder in this country. And so I'm a big believer that we need to create solutions that work for all parents and that kind of drive toward that solution where it isn't just the women's problem.
Now, there's a new, small movement behind this idea that moms who stay at home should be paid. You've actually pushed back on that quite hard. As a mom yourself, why?
I did. So my podcast co-host and I, Samantha Edis, wrote an op-ed in Newsweek last week talking about our thoughts on the Marshall Plan for moms. Look, I think any conversation that puts moms at the forefront is important because, like I just mentioned, women are getting crushed by the pandemic. But I think that any solution that hits only for mothers and for women kind of dives deeper into so many of the systemic problems that we see rather than creating a solution that makes change for women. So what we'd like to see is change that allows women to get back to work. When you look at the Marshall Plan during World War II, it was to put European countries back to work. And what we need to do here is find a way to get everybody back in the workplace who wants to work. So I think things like childcare tax credits or direct payments for childcare are great. And that's a win-win for women because most childcare providers are women, many of them women of color. And so it puts them back to work too.
So if you think that co-working will see a resurgence post-pandemic, for women and everyone else, does that mean you're optimistic about a company like WeWork, which, had its stumbles going into the pandemic, but obviously got hit hard by the pandemic itself?
I think it's interesting, right? I can't really speak exactly to WeWork's business plan, but I look right now to companies like Industrious and companies like The Riveter, the way we treated space. So Industrious has an interesting model that's more of a revenue partnership with their landlords. They don't take on the risk and the liability, and they share in the revenue. I think spaces like The Riveter will resurge because commercial real estate will be different. There's going to be so many empty spaces as companies downsize their footprint. And so we need to think, how can we use those spaces? And I think that open spaces will be really important. Companies will still gather for meetings and events and all hands, although they might not have those one-by-one offices. And so I think there's a big opportunity for kind of even more diverse and new models out there as we move forward.
So Mark Zuckerberg recently popped into a Clubhouse, and he wasn't there for very long, but he did say he thinks that by the end of the decade, 50% of Facebook employees will work from home. What do you think the work office space landscape looks like a decade from now?
I probably don't agree with Mark Zuckerberg very much, but I do here. I think that we will see a complete shift, that the changes that the pandemic has brought will really stay with us. And I also will say that I think that does open the door for a lot of different people. It allows people to live in cities that are affordable for them and for their families and work for really big companies like Facebook, which was something that was unattainable before the pandemic in many ways. I also think that, for parents, getting rid of the commute opens up a lot of doors. So I think there's a big opportunity there to kind of level the playing field in a way that we haven't seen before.
All right. Well, thank you so much for pushing the envelope on some of these issues and helping us think ahead. The Riveter founder and CEO, Amy Nelson, appreciate you stopping by. Okay, coming up, Jackpocket is betting big on the rise of online gambling, offering a secure way to order state lottery tickets with only your phone. Helpful in a pandemic, right? Peter Sullivan, Jackpocket founder and CEO, with us next for an exclusive interview. This is Bloomberg. With traditional casinos and racetracks closed, online gambling has taken off. One startup wants in on that action. That is Jackpocket, the first and only licensed third-party lottery app in the United States. After a successful launch in New York in January, Jackpocket is announcing new funding. Joining us now for an exclusive conversation, founder and CEO Peter Sullivan. So Peter, how does it work?
Well, first of all, thank you so much for having me on. The Jackpocket app allows users to play the official lottery games they already know and love, so everything from the Mega Millions to the Powerball game. And we've actually worked with New York and New Jersey to create the first set of regulations that allows a third-party app to be in the App Store and allow users to actually play those official games directly from their home.
So our senior producer, Allison, just shared that she bought tickets for her husband for his birthday. She said it was really easy, which made me wonder, is it too easy? Obviously, we're in a pandemic. People are struggling, and I wonder how you think about that.
Yeah, so we take responsible gambling really seriously. And unlike going into a conventional brick and mortar store where basically it goes unchecked the amount of cash you're spending, we've actually worked with the National Council for Problem Gambling to ensure that there are safeguards on the app. So players can set their own daily, weekly, or monthly spending limit. They can also decide if they want to take a break from the app for 30, 60, or 90 days or indefinitely. And it's something that we've worked closely with the regulators on. We think it's really important to be able to monitor that type of spending habit and to give the power back to the consumer to decide how much they're comfortable with playing.
Now, you've just raised some new money. Tell us how you plan to spend that, where we're going to see you expand in states beyond New York.
Yeah, so we're really excited to officially announce that we raised a $50 million Series C round, which includes some amazing investors like the Rain Group, Green Spring Ventures, as well as some corporate venture companies like Circle K Ventures, Tegna, who are going to help us continue to expand into new markets. But what we're really excited about is that we're going to be able to fuel the growth that we need, both on user acquisition and growing the top line of the company, along with going into new states. So just within the last month in January, we've actually seen over 1 million downloads. We were ranked number 7 in the entertainment section on the App Store. And we've seen over 100% user growth from all of 2020 within just the last month. So it's been amazing to be able to start to put that capital to work. And we're here on your show to announce that we've successfully raised that $50 million Series C round of financing.
All right. Thank you for sharing that with us. As you look forward, we're going, into some sort of new normal. What's your outlook on activity when, it might be easier to just walk into the gas station and buy a ticket yourself?
Yeah, totally. We want to add a more convenient way for people to play, irregardless if there's a pandemic going on. Obviously, if there's a safe alternative while the pandemic's happening, we're happy to provide that to our users. That said, I think what's going to be interesting is as we start to expand our product offering, and if we get into other verticals of gaming, whether that be casino, whether that be sweepstakes, whether that be raffles, it's going to be really interesting. And this last month, New York actually, and the New York Gaming Commission actually approved new regulations that will allow for instant lottery delivery. So you may know them as scratch-offs. but actually from the app, you'll actually be able to order scratch-offs, and we'll be able to deliver those to people within the state. So, we don't think we're going to change all behavior. My dad is a everyday lottery player that always steps by the corner store. But if we can provide a more accessible, more enjoyable, more convenient way to consumers across the country, we want to be there, and we want to continue to evolve the product to make it more fun and enjoyable.
All right. Well, we will keep following your progress. Peter Sullivan, thanks so much for joining us. Also, some new birthday ideas as well. Thank you for sharing, the CEO of Jackpocket there. Okay, that does it for this edition of Bloomberg Technology. Bloomberg Daybreak Asia is coming up next. I'm Emily Chang in San Francisco. This is Bloomberg.